Hello and welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dreams of owning a home or investing in one. Well, it seems as though this Morrison Tulsa Real Estate Fund saga just keeps continuing. Okay, so as many of you know, this past Tuesday, I believe it was September 5th, there was supposed to be a meeting between all 15,000 investors and Jay Morrison, right? At the request of Julian, who is the top investor in that particular fund. So first, I looked at No Stingy Energy podcast, which used to be called Business Over Breakfast, the BOB. They had a bunch of investors from that fund on stage. They were basically expressing how they were not happy with what was going on. They also spoke about what occurred during the meeting. And one of the things that occurred was they said that Julian was quiet, and they were quite disappointed in that, since he went on Instagram, went on YouTube, and said that he had all these receipts. So I said, well, let me go on Instagram and see what Julian has to say. So in the afternoon I checked, Julian said that he was issued a cease and desist letter. However, he has recorded a video and he will be uploading it on YouTube. So I looked at that video that he recorded on YouTube, and I saw it was a 3-hour long video. So I'm not going to deep delve into every single thing that was said. However, that video was the recording of the meeting. When I thought about the fact that Jay Morrison issued that cease and desist letter to Julian, I was like, wow, because Julian said that they were friends, expressed that they weren't just friends on social media, but off social media. They shared certain things. And I was like, whoa, let this be a lesson to some of you, particularly those of you who are extremely young. There are people out there that will use you to a certain extent, and then when they have no use for you anymore, they will ghost you. Julian was the top investor of this fund, who paid $40,000, put that into the fund. No other investor put that much. He was not, Jay did not respond to him after a month, so that is why he came out on social media. Typically, let me say this, when you are a private lender, if a private lender calls you, texts you, and emails you, and they can't get through to you after a week, many of them will contact attorneys. No joke. Real talk. They may let you get off for a while, but after a week, their alarms are going off. My alarm goes off too. I give people a little bit more grace, but that's kind of rough. And also another thing that I want you guys to take away from this is that just because somebody is your friend, that doesn't necessarily mean that they should be your business partner. And before you even give them any money, don't give them money just because they're your friend. If there's something wrong with the contract, if there's something wrong with how something is set up, check them before you write a check to them. And tell them, hey, are we going to change this, not this, that, and the third, and make them change it. until you are comfortable. And if you're not comfortable, just don't do business with your friend. And if your friend gets upset that you didn't do business with them, then they were not your friends from the beginning. And I have to say this, I don't believe that Jay Morrison was Julian's friend from the beginning. Julian may have wanted to be his friend, but I don't think Jay necessarily wanted to be his friend. He only wanted to be his friend for his money. That's what it looks like to me, because he didn't have to go this route. This route is rather drastic. Another thing too, since we're also on the real estate tip, just because somebody is your friend, that doesn't necessarily mean that you need to move in with them and live with them and become roommates. That doesn't always work out either. All right. So that's a lesson that we all learn and we all see right now. Those of us who are a little older, we know. But again, yeah, that doesn't sit right with me at all, issuing a cease and desist letter to the person who believed in you so much. That's not a good look. Okay. Now, another thing that I wanted to point out, and other people in the No Stingy Energy podcast pointed out that I didn't mention earlier, is the fact that the fund had 15,000 investors. People, that's a lot. Because what happens is, when you have that many people in the fund, you are supposed to be transparent. Not only that, you do have to issue something called K1s for tax purposes for each and every person. 15,000 K1s. Paper costs money. Processing paper can sometimes cost money than the actual paper itself, plus the ink that's on it. And as you guys know, I mentioned to you that the expenses on the fund are already quite high. As a matter of fact, I believe that it's the highest that I've really ever seen. But then again, you know what? I haven't seen every single fund. There might be some that are higher. But yes, that's really that also digs into whatever profit is to be made. That alone right there. Okay. Typically, funds have 100 to 300 max. And yes, there is a limit to, other companies do put a limit as to how many people are allowed to invest in their fund. They don't necessarily always put a limit to how much money that they're going to raise. They actually put a limit to how many people can invest. Because I remember way back in the day, and I know this is not real estate, but there was a fund, Magellan, that was run by Peter Lynch, who was running that fund for like 13 years. I don't think that fund ever went into the negative. It was always positive. Several times I tried to invest and I said, hey, I want to I opened up my account and told them I want to put money in there. And they're like, no, we got enough people. Look at the other funds that we have, but you can't put your money in this particular one. Okay. So yeah, that, and I know sometimes too, like when I am on the other crowdfunding sites, it'll say filled, meaning that this is filled to capacity, or sometimes they do have a financial goal and they've met it. The other thing too is Jay was trying to make it affordable by making the minimum $500. That is a bit low because, see, here's the thing. When you make it that low, most people are going to do what? Just put in $500. Even the people who can afford to put in more are only going to put in $500. So it's going to take you a little bit longer to get to your financial goal than opposed to, let's say, a fund that wants $5,000 or $50,000. Okay. So when you have a lowball number like that, you shouldn't have such a high goal, because I think he wanted what, 50 million, some number, somewhere in that ballpark. If you want that amount, then you need to charge people more money. If you're only going to say $500, then the project should be just maybe like one house, and that house would be somewhere in the South, in the mid-South, where you can get a house for like $50,000. That'll work there. But when the goal is, what is it, 50 million, 500 million, I forgot what it was, it's just a little bit too much. And since he was the CEO, CFO, and COO, he pretty much was burning the candles at both ends. And if he's not burnt out now, he'll probably eventually be burnt out. Real talk. Okay? So that's the issue. Now, Julian says that he feels like he had too many people. Maybe Jay needed to work on delegating his resources a little bit more, or delegating the task more, so that all of it wouldn't be on him, and that might be the issue. He did admittedly said he didn't know everything, he didn't know what he was doing, and he needed help, which is the first step. It's just that we kind of wish that it was caught earlier and not later. Well, those who actually invested. The other thing, too, that I wanted to point out was that I noticed that there were a number of people who said they didn't have a dog in the fight that was at the meeting, that they weren't invested. So I was like, wow, that's strange. This is an investor meeting, yet there are so many people there who are not investors at this meeting. Not only that, they're allowed to talk. However, those of us on YouTube are criticized. That's a problem for me. Okay, that's contradictory, and that doesn't make any sense. Okay, so I'm gonna just move on to the next thing. The next thing is the $2 million for marketing. He claims that no, it wasn't Treff, it was another company, one of his other companies. But when he started talking more, it sounded like that company was related to Treff, maybe a subsidiary of some sort. I just felt like he was talking in circles sometimes. And I was like, you know what? I'm not going down this rabbit hole, but let's talk about that $2 million in marketing, whether it was Treff or it wasn't with Treff. The thing about it is most funds don't spend that much money. They don't spend $2 million on marketing. They'll spend $25,000 on marketing, but not $2 million. Okay, so the marketing seems out of whack. I'm not sure about the person who charged him that amount. I'm wondering if there's some kind of foul play there, allegedly. I'm not sure, but it is definitely way more than what most funds pay out. Okay, so that was the issue. Another issue that I had with this. Next issue that was brought up was the SEC. Okay, many of us, we were happy that the SEC backed this up, or as Jay says, cleared the fund. Let's look a little bit more into the SEC and its functions, okay? Because the SEC, saying that it cleared the fund may not necessarily be the best terminology. Yes, the SEC is there to protect investors. However, they are limited. You see, the SEC actually, they look at the paperwork and they care more about the paperwork as opposed to, and how properly it's filed, than, its effect on the people. And I'm not sure where I heard it, but I know I heard where the SEC said that this fund was going to go bankrupt in 5 years. Well, they didn't exactly lie, did they? They did tell the truth. But the thing is that, okay, you have to say to yourself, well, if the SEC said that, why did they still approve of the fund? Again, because the paperwork was done right. The other thing, too, that you have to realize about the SEC is that the person who actually does the investigations, the head of it, is appointed by the president. So typically that person is changed every so often. It's not the same person. And at that particular time, Donald Trump was in office. And we know what kind of people Donald Trump puts in office. Not to badger the person too much, the person that was in office was a lawyer. He also had an engineering degree and an economics degree, right? Nothing wrong with that. But the thing is that there is a difference between economics and finance. Okay. Economics deals with the marketplace, the behavior of people, products and services. When you talk about finance, you're talking about dealing with and managing money more or less than managing people. Do you see the difference? And the thing is that this particular person that was in charge, he was consistent when it came to being in law, but he wasn't necessarily consistent when it came to actually working in finance. He had the education of economics, but he didn't necessarily have the experience when it came to economics. And there is a difference between book knowledge and applied knowledge and experience. So that's something that we all have to take into account. So you can't just say, oh, well, the SEC approved it, so everything is fine. Everything is gravy. Everything is great. That's not necessarily so. And we can see that in this particular case. Right? Now, the other thing where I kind of felt like he was going in circles also is the fact that the fund and the house he lives in, right? So the fund did buy more than one property. One of the properties, the largest one, I believe, sits on 27 acres. And forgive me if I got this mixed up, but it appears that Treff bought this property and then Jay changed the title to it and put it in his personal name. Normally, funds don't do that. Normally, funds only buy properties for profit. Not so that a manager, president, or anyone else can use it as their private residence. So I'm going to need somebody to go back into the contract that they signed, because it's been a while since I've seen that particular contract. I don't believe that that is a little sketchy. That's very sketchy to me. Very sketchy. So guys, yeah, that rubs me the wrong way. That's not how things are done. It isn't. It really isn't. So I would really check into that. The other thing was when choosing properties, Julian said that he presented deals to Jay. Jay declined them. There was another person that was in the group from the podcast that said that they presented deals to Jay, and Jay also rejected them. And that person also is a friend of Jay's as well. But the wife, her properties, her deals were accepted. So I said, well, I never knew that she was in real estate. So I looked her up, and I don't really see any licenses. You don't need a license to be a real estate investor. But I still couldn't find any information previous to this fund where she really was in real estate like that. So I thought it was kind of odd that the people who have experience and who have a lot of money in real estate, their deals were denied, but her deals were accepted. And I take it that her deals, they're not doing that great compared to the deals that were rejected, which did phenomenally well. Yeah, that's also very sketchy to me as well. And then the last thing that was mentioned that was pretty sketchy was that he mentioned that he had to use funds to fight off certain court cases. I know that there was one with a person who was a joint venture to the fund for $4 million. However, there was another one for defamation of character. I believe that particular one may have been related to Tony the Closer. But here's the thing, though. Tony the Closer didn't sue for the fund. From my understanding, Tony the Closer sued because Jay was supposed to come to a conference and he never showed up. That's personal. That's not the fund. The fund's money should not have been used. If it was, it should not have been used for a personal legal battle. And so that to me is also sketchy. You see, here's the thing. Some of us in real estate, and I believe Jay is, you have your business and then you have your personal. You don't mix your business accounts with your personal accounts. If something happens to you personally, you're supposed to go into those bank accounts that have your name on it. You're not supposed to go into the bank accounts that has your business name on it. That's commingling of funds. If the IRS, and don't get it twisted, the IRS does listen to YouTube, looks at Facebook, looks at Instagram, so does your insurance companies, all of them. All of them be checking you out. So don't get it twisted and don't get so funny and so lax. But if they were to hear that, if maybe I'm mistaken, but if they were to hear that, oh, somebody's going to get an audit. Somebody's going to get in trouble right then and there. And yes, you can write the IRS and report someone else as well. In addition to, going to court if you have to go to court. But again, guys, I'm not an attorney. I have worked for a law firm for a long time, but I'm not an attorney. Okay? Seek your own legal advice so that you know best how to proceed. But those are my opinions as far as what's going on. I feel as though it's a mixture of not handling the money properly, as well as some, not just being, not just a moral issue, but also, I'm trying to say this properly, but also not being genuine or not being honest, let me say allegedly, with these deals. So hopefully moving forward, things will change. But I don't like what I'm seeing right now at all. I don't like how things are going. I wish you all luck. I honestly do. All of you that are investors, I wish you all luck with what's going on, and hopefully the saga will not continue too much longer. I know that it will, but the best of luck to all of you. So guys, that's all I have for you tonight. Please feel free to share this amongst your friends. Remember, each one reach one, teach one. Bye for now. Until next time, have a good night.